Ag and Biofuels team. His work lately is focused on research and analytics for the supply chain, and he's also working on novel benchmarking service for biodiesel. So, hey, Will, how are you doing today?
Hey, Susan. I'm doing well. Thanks for the intro.
Sure thing. So I just want to let everybody know as we get started that we will make the recording and slides available to everyone after the webinar. And just to get started, I wanted to introduce our company. We're the world's leader of real-time monitored information for the energy industry. We actually do this through proprietary data and analytics, and I'll give you some examples of that coming up. So we are an international company, more than 300 employees now. We have headquarters here in Louisville, Kentucky, where Will and I are today, and we also have offices in Boulder, Boston, and a number of places across the world. We're a privately held subsidiary of the Daily Mail and General Trust out of London. We're a QAP provider for all renewable fuels. Genscape clients, we have more than 70 facilities, including more than 40 ethanol facilities. And we're also becoming a growing information source for the ethanol supply chain, leading to today's webinar. We have ethanol storage inventory reports in the Gulf Coast and New York Harbor. We're also going to be producing a report on Chicago, including Argo, coming September 1st. So to kind of give you an example of how we provide this transparency across the market, here's a sample. This image really shows information that's related to the ethanol supply chain and the activity chain around ethanol. And so really this shows how we approach market transparency. We provide information across the activity chain, from inputs to corn yield forecasting, ethanol production, transport, storage, credit verification. We really work to provide better information by using measurements, proprietary technology and analytics to make this possible for market participants. And to kind of show you an example of how this proprietary technology works, here's a sample of our New York Harbor ethanol inventory report. And the pictures at the bottom show you actually how we get to this data. So for its storage reports, we actually measure individual tank levels at major storage hubs. We use fixed-wing aircraft and helicopters to fly over these tank farms and actually use infrared and visual imagery to capture the levels in the tanks. And these really we use to aggregate and then come up with the report that you see at the left there, the capacity utilization and the field-by-field levels. We have some new products coming in 2015. Again, we're going to be having Chicago Argo inventory. We're also working on some rail transport and global ethanol transport. One thing to mention, too, about these inventory reports is they actually come out ahead of the EIA stocks report, so we actually have very timely information for the market. And just to get into today's presentation, we'll be splitting it up really into two pieces. So we'll be talking about the global ethanol landscape, and then we'll also be talking about Argentinian biodiesel. We'll just be talking about Argentina with respect to the biodiesel market. We would have liked to have covered everything today, but we really wanted to cover the most timely topics for the hour that we had with you. So for the global ethanol landscape, we'll start out with an overall picture, and then we'll actually talk about some important individual trade partners, and then how emerging partners are also helping grow the ethanol export industry. We'll give an example of transport transparency, some things we're working on with intelligent vessel tracking, and then we'll give you a heads up on what to watch going forward as this landscape evolves. Very similar for Argentinian biodiesel, we'll talk about economic and regulatory factors, export trends, and what to watch. And we'll also cover the new CARBIO survey method that was approved by the EPA in January. It's been a pretty hot topic in the industry. We appreciate your questions. So please type to submit your questions in the box on the GoToMeeting dashboard. We will treat all of your questions anonymously, and we'll answer them at the end of the presentation. If we don't get to all the questions, then we'll try to do a question and answer follow-up as part of our follow-up to this presentation today. So starting out today, I'd like to cover the overall picture of global ethanol landscape. Looking back at 2014, we saw an increase in exports 16% over 2013 and 11% over the 5-year average. There were very little imports last year, and really what we'll show in the coming slides is that there are two main drivers for our net exports. One of those is regulations and environmental mandates across the world, and the other one is really just strict economics. So When you look at the average year-over-year pricing, the U.S. ethanol price per gallon actually fell about 23 cents from 2013 to 2014. From 2014 to 2015, you'll actually see that that price drop is even more dramatic. So we'll start here and then start getting into what affected this growth and break it down to different countries and how this worked for the United States. So as you can see, Canada is our top destination for exports. Beyond that, the Brazil, UAE, and Philippines, those made up for a total of 70% of our exports. Canada made up a total of 40% of those exports. So the interesting thing that I want to point out here is the remaining portion, the 30% of our 850 million gallons of exports last year, was spread among 28 trade destinations. So, you know, a couple of things about this. I think it's a testament to the work the market participants have done to open up trade channels. And it also, as we'll show in the upcoming slides, these smaller volumes of trade among these partners are very important to the growth of our export industry. So the stack chart on the right there shows how the growth in U.S. exports stacks up and the different contributors. So kind of starting from the bottom, we did have a few trade partner decreases, but those were kind of exceptions rather than the trend. So those were in namely Sweden, Norway, and Peru. Canadian growth was very marginal, and I'll show, and then when we talk about Canada, that's going to be a typical trend in coming years. There was a substantial increase in Brazil. That's a very volatile trade relationship, so it's very year to year on how those factors go. And Will's actually going to deep dive into what's going on in Brazil, what to watch, and expectations as the year unfolds. But I think one of the biggest stories of this slide and the change from 2013 to 2014 is that emerging partners really had a big impact on the total growth of our exports, and also some other trade partner increases. Those were actually a majority of the growth between those two outside of Canada and Brazil that really made us grow from 2013 to 2014. Just as a note, the trade decreases due to the EU tariff, the anti-dumping tariff, were sustained in 2014, but you really didn't see any additional fallout from that. So what about imports? Because you've seen these last few slides focus a lot on the export trends, and we've already said that there weren't a lot of imports in 2014. We'll be talking about imports in the context of Brazil when Will starts covering that. As you can see, the black bars here in this chart show the overall U.S. imports, and the blue bar shows Brazil. So you can see that since the RFS, really Brazil has dominated the total U.S. imports. There's also some from the Caribbean basin, and those Central American and Caribbean countries dehydrate ethanol, which is typically originated from Brazil, and this avoids certain tariffs of the ethanol actually coming in directly from Brazil to the United States. So we'll discuss how imports are shaping up and the factors that affect those when we talk about Brazil. But the remaining countries that we talk about will be primarily talking about exports, since those are really the key trade relationships with those countries. So starting into our deep dive section of the global ethanol landscape, I'll talk about Canada. In essence, the overall picture with Canada, the trade trends are in the renewable fuel regime are fairly predictable and stable, especially when you compare it with some of the other countries. So there are two real drivers of exports from the United States to Canada. The first one is they actually have a federally mandated blend rate, and then the other one is really just economics. So the Canadian renewable fuel standards target 5% blend of bioethanol with gasoline. There is a slightly higher mandate in Saskatchewan. However, if you look at the trade trends, Canada actually blends more than 5%. They blended 7.1% in 2014, and there's a similar forecast for 2015. And really this is due to it being cheaper for Canada to actually blend more ethanol than it is to use the pure gasoline for that marginal 2%. Now going into 2015, really there aren't any domestic production increases expected in Canada in 2015. So the same type of rate of imports for Canada are expected. Gasoline usage is actually increasing very marginally, so in terms of a percentage fraction, you're not seeing much of an increase there. So the story is really that exports from the U.S. to Canada will be very similar in 2015 as they were in 2014. A couple of notes beyond 2015, the domestic production incentives, the certain pennies per gallon, they actually sunset for domestic Canadian producers in 2017, so that could actually make ethanol imports into Canada slightly more competitive. The forecast gasoline demand on average is the FAS is reporting 0.6% per year through 2022, and this is a little bit different than the United States annual energy outlook from the EIA, which is actually showing a decline through those years. So that could also be a slightly marginal increase in some ethanol demand in Canada. One thing to watch is the U.S. dollar inflation relative to the Canadian dollar. So the U.S. dollar has inflated more than 10% against the Canadian dollar since September 2014, and the exchange rate really hasn't been this low since the inception of the Canadian federal mandate. But you can't just take inflation in isolation for ethanol. You actually have to look at it against other factors because it's not the only thing that Canada imports. So what we did was we took a look at if we could benchmark the Canadian rack price and the U.S. ethanol price and see if those things were trending together or diverging. The orange line you see here is the U.S. ethanol price, and the blue line is the Canadian rack price for gasoline. So basically what we did is we took pre the decline of crude oil prices, we created a benchmark and then saw how the prices trended using that divisor. So basically what this chart shows is that even with the U.S. dollar inflation, we're not seeing the U.S. ethanol and Canadian gasoline rack prices diverging on a percentage basis. If that was something that started to appear, then there could be a potential reduction in exports to Canada because remember, they're actually blending more than the mandate and economics are driving that. But that's not something that we're seeing right now. And if you look at the year-to-date from basically the census data, exports are down a little bit compared year over year, but it's very early in the year. We only have data from January and February. So, and historically, the majority of exports to Canada have happened in the last half of the year. And I'll switch over to the next slide here, which shows you can see the arrows are pointing out early portions of 2012, 2013, and 2014. So we've seen troughs in the early part of the calendar year. So I don't think that it's a reason really to worry about declines just because we've seen that slight difference between January and February. The vast majority of the exports that the United States sends to Canada actually happen in the last half of the year. So, Will, at this point, I'll hand it over to you. I talked about Canada, and I'll hand it over to you to talk about Brazil.
Thanks, Susan. So as Susan mentioned, Brazil, along with Canada, is one of our major export destinations for ethanol. But also, as she mentioned, Brazil is a much more volatile trading partner, and that's simply because, Susan, if you want to move to the next slide. Brazil is a major producer of ethanol as well, so they have a huge domestic market. And so depending on what the economics are of that year, we could be a net exporter to Brazil or we could be a net importer. Last year, as you can see in the graph, we were a net exporter to Brazil, and actually our exports to that country had increased 42% from 2013 to 2014. But you all have probably heard in the news, a lot of people are talking about the possibility this year of this being a major year for Brazilian imports into the U.S. And so what are people looking at when they're making those sort of predictions? I wanted to sort of highlight a lot of those on this slide. And when you see, just to explain what you're looking at, when you see those red arrows, that's a factor that means that U.S. exports, if that factor is red, U.S. exports to Brazil will not be as likely. So, for example, the fall of the Brazilian real really makes it hard to export to Brazil. You have their prices, which appear to be dropping. Another factor which could possibly be beneficial to U.S. exports to Brazil, is that they've increased their blending mandate from 25 to 27%. So that's going to increase domestic consumption within the country. Also, along with the domestic consumption factor, you have gasoline prices in Brazil going up. So more people will be switching to ethanol or ethanol blends. The decreased fuel costs for shipping, that's kind of a wash because that benefits both sides. You also have both the RFS2 credits and LCFS credits that give importers of Brazilian ethanol potential profit opportunities above just simple arbitrage. So that's something that hurts U.S. export prospects and can pave the way for more Brazilian imports coming into the U.S. Also, something we're looking to this year is the fact that biodiesel production has been down, so there's less competition in the space for D5 RIN, so that could keep the RIN price up and again make it more attractive for people to import Brazilian ethanol into the U.S. So taking a deeper dive into some of these factors, I wanted to highlight again the exchange rate between the Brazilian real and the U.S. dollar. As you can see, it has inflated more than 30% since September of 2014. These last few weeks, it appears that that might be stabilizing a little bit, but as a whole, it's been a big change between these two major trading partners. And so it really makes, for Brazilians, it really makes exporting to the U.S. look like a more attractive option. The one thing, however, to keep in mind there is that if the situation remains volatile, if people are unsure of what that exchange rate is going to be in the coming weeks, they might be sitting on the sidelines and waiting for things to calm down before they make any major deals. Another key factor to dive into is the price of sugar. It's hard to look too deeply into Brazilian ethanol without also diving into the sugar market. Most sugarcane mills in Brazil have either sugar or ethanol. It really just depends on what that year's economics look like. And so sugar prices have been on a steady decline, similar to what we've seen in the price of Brazilian ethanol. And also, like similar to Brazilian ethanol, it's a highly regulated market, and it's highly dependent on policies around the world. One thing that has a lot of commentators speculating that most Brazilian mills will be producing ethanol this year is that a lot of those international policies tend to work against Brazil. India, for example, has a lot of incentives in place stabilizing the price of sugar. And other Southeast Asian countries as well are expected to produce quite a bit of sugar this year. So Brazil was going to have a lot of competition in the sugar market. And on the other hand, policies in the U.S. keep making it more attractive for that Brazilian ethanol to be imported here. So this next slide I wanted to show because all of those sort of complicating factors aside, one of the major factors is just price and the ability to arbitrage. As you can see here, it's a little bit of a complicated slide to look at, but the light green line is showing the price difference of Iowa ethanol from Sao Paulo ethanol. So when that price is positive, the price is higher in the U.S., so we tend to be a net importing country. And when that drops below zero, the price is, Brazilian ethanol is cheaper, is more expensive, so we tend to be a net exporting country. So there's nothing too complicated with that, and in fact, it's like what you would expect. What I think is interesting about this is that there are times where it deviates from this pattern, and even when we are a net importer or net exporter, there still tends to be ethanol moving the other direction. And I'll get into some of those scenarios of why imports might make sense even when there's not much price difference in a coming slide. So as I mentioned earlier, one of the big questions people have been talking about is, is this going to be a year of a large wave of Brazilian imports? We've been watching closely the EIA's data on U.S. imports of fuel ethanol. They release that weekly, and for the first part of this year, there were no imports of any fuel ethanol into the U.S. We are actually exporting quite a bit, but as recently as last week, that information was updated, and we were actually importing 53,000 barrels per day for the week ending in April 17th. Through our vessel tracking system, which Susan is going to get into more details, we were able to track some of that ethanol as coming from Brazil, and so I just want to highlight again that this is the largest amount of ethanol we've imported in any weekly period in over a year. So the big question will be: is this a sign of what the year is going to look like, or is this just a blip? So in the next slide, diving into some of the details of how this import scenario might work. You see there a possible price at the port in Tampa and a possible price in Santos in Brazil. And in this scenario, the Brazilian ethanol is cheaper, already making that trade more attractive. But if you're an importer and you don't have a renewable fuel obligation, then you can also capture the RIN on that trade. So not only do you get that price difference, you get the price of that RIN, which lately has been as much as 25 or 30 cents higher than what it was last year. So in this scenario, you would have a 95-cent per gallon allowance for both transport and any export taxes that you have to pay. So this just goes to show how those environmental credits can really work in the favor of someone who's importing ethanol from Brazil. And back to exports, again, just before that recent wave of imports that just came in, this year looks like it was going to be similar to last year. Actually, we were exporting more than last year. Our exports to Brazil were up 31% over that same period last year. So again, the big question will be, are those factors going to keep indicating that this is going to be a big production year for Brazil and there's going to be a lot of ethanol to move this way, or is it going to be similar to 2014? So that wraps up Brazil, and I wanted to dive into some of our other trading partners, some smaller partners that we've been trading ethanol to for a while, and some of our emerging trading partners as well. Because as Susan mentioned earlier, while none of these make up as large an export destination as either Brazil or Canada, as a whole, they're a big part of the picture for U.S. ethanol producers. So Susan, if you'll move it to the next slide. So this is a text-heavy slide. I apologize for that, but there's a lot of material we wanted to cover here, or at least just touch on briefly. Again, just showing how 2014 there were big increases for a lot of these emerging partners. Korea, for example, our exports went up over 200%. Spain, which I'll dive into a little bit more later, we hadn't exported in the last 5 years to them, and in 2014 exported over 400,000 barrels. We also had big increases with Tunisia and Panama, and then some of our more long-term trade partners also saw big increases last year. Like the UAE had about a 30% increase, India a 30% increase, Nigeria a major increase, and then the Philippines I'm going to dive into as well. They've been one of the bigger trade partners with us, but last year was especially big. And so diving into the Philippines a little bit, this is a situation where policy was one of the major factors. Their government is moving their blending mandate from 10% to 20% through 2020. And at the same time, their domestic producers weren't able to keep up with the increased mandate. So that created a huge market for increased U.S. ethanol to the Philippines. Now, whether or not that lasts for a long period, that's yet to be seen. The USDA is predicting that 2015 will be a similar year, but that as that increased capacity comes on, we expect that market to diminish in the coming years. You also have to keep in mind that Brazil and Thailand also export to the Philippines, so price will be a determining factor as the U.S. has competitors there. Another sort of strange thing we witnessed in 2014 were the amount of ethanol exports to Spain and the Netherlands. Susan touched on briefly earlier that there was a EU anti-dumping tariff, which essentially shut off any American ethanol exports to the European Union. But we believe that some of this ethanol going there is actually just being blended at the port and then moving on to other destinations. But I put up this chart again that simplifies the prices over the last 5 years or 4 years, just to emphasize how low U.S. ethanol prices have gotten and how that makes some of these stranger scenarios all of a sudden seem more possible than they would have years ago. Again, just to sum up these export trends, as you can see, even though most of these are smaller trading partners, when you combine them, over the last couple of years, they've made up a bigger factor than either Brazil or Canada when together. And comparing this period to the same period of last year, we see that really the situation looks similar. If anything, these trading partners are a bigger part of the picture. But again, it all depends on some of those factors we went over with Brazil. You know, is this going to be, what's going to change this year? And so heading into 2015, what are the things that we're going to watch for to see, is this year going to look like 2014, or is this going to be a big change? So I want to just touch on some of these things, these emerging trends and what we'll be watching for 2015. Obviously, everyone who's interested in the U.S. economy has been talking about U.S. interest rate hikes. We don't know if those are going to happen, obviously, but we do know that they can have a major impact on the value of the dollar, which in turn could possibly make exports less attractive depending on what happens there. Similarly, the situation with the Brazilian currency, if that stabilizes, that could be a good thing for people who want to import Brazilian ethanol. If that continues to be volatile, it'll sort of be more of a question mark there. And then, of course, there's the simple economics of, you know, what's going to happen with the price of U.S. ethanol. And a lot goes into that. Obviously, what the corn harvest situation is like. Are we going to have another bumper year? Are corn prices going to stay as low as they have been? And then similarly, the gasoline prices will also be impacting the price of U.S. ethanol. We know that Iran oil sanctions may be lifted, which could lower oil prices once again. And I know you all have probably seen the EIA released its summer driving season predictions, which said that this summer the gas average could be as low as $2.45, which is $1 less than last year. So in that sense, this year is shaping up to look very different than last year. And then obviously one of the major things going on in the RFS2 area are the new announcements coming from the EPA. And I'm going to let Susan dive into that. She's going to provide some more details there.
Thanks, Will. And I'll warn everybody in the audience ahead of time. I'm going to move through these slides very quickly. These next 5 slides on the EPA RFS2, because I kind of want to stick to the global picture. But it's hard to do that without talking a little bit about what's going on in the United States with the mandate. So I'll touch on this very quickly, and certainly please ask your questions, and we would be happy to answer them. So So some emerging issues, according to a consent decree that the EPA, or proposed consent decree that the EPA published with some additional pledges, the expectations are that they're going to propose 2014, 15, and 16 RFS2 renewable volume obligations by June 1st. You can expect a public comment period. We also heard from the EPA at the Omaha Ethanol Emerging Issues Forum the Nebraska Ethanol Board hosted a couple of weeks ago that there will be a hearing, although the timing of that still hasn't been finalized. The expectation is that the RVOs will be finalized no later than November 30th, 2015. What's been stated so far is that since 2014 is over, there's no RVOs yet for 2014. The expectation is that's going to be based on actual production, and actual production will have a lot of relevance there, and that's based on, consistent with the EPA statements too. So the proposed rules will be information, and the only available information that the market has to act on until the rules are final. And the timeline here is intended to get the proposed volumes back on track so that the EPA is actually hitting this annual November 30th statutory timing. So that's kind of the timing of the RVOs. I think those are going to have a big impact on all the renewable fuels market. So everybody will be watching closely, as will we, as we get closer to that time frame. So another important thing that I want to point out here is that the EPA invoked a new waiver authority in its original 2014 proposal. And so as you can see to the chart on the right, the green bars are the original Clean Air Act volumes, and the blue bars are the RFS volumes. So as you can see, what was proposed for 2014 originally, which is now defunct, by the way, and it will be reproposed in June, but was much less than the Clean Air Act volumes, and this was kind of a change in the tides, the first time that this had happened. So again, the Clean Air Act volumes were not preserved in the 2014 proposal. The EPA really cited two factors for invoking this waiver of authority. Then the first one was the limitations in the volume of ethanol that could be consumed in gasoline. And the second was limitations in production. So ultimately, again, the 2014 wasn't finalized, and it will be reproposed in 2014. But this also, had a big impact on the implied corn ethanol RVO. And really, this is the renewable fuel RVO minus advanced fuels, which has traditionally been filled by corn ethanol, but could be filled by any renewable fuel technically. But as you can see, the way that it would have been proposed according to Clean Air Act would have been over 14 billion gallons and actually ended up somewhere around 13. So the EPA really considered three factors in its consumption forecast that place limitations on the defunct RVOs that it proposed. The first one was the overall demand for gasoline, and it uses the annual energy outlook as the source for this. Then it looked at consumption of ethanol in E10, E15, and E85 blends. So E10 actually was exactly 10% of the overall estimated gasoline consumption, with some accountancy for E85. E15 was accounted with 0 gallons. E85 consumption was estimated between 100 and 300 million gallons, and they used a Monte Carlo estimate to derive a mean of 180. They calculated the E85 blend rate at 74%, and the reason why this is because they include intermediate blends toward the E85 gallons. E0 was accounted for in the proposal. So the defunct proposal, they arrived at these numbers, around 13 billion gallons for renewable fuel minus advanced, which is actually traditionally filled by denatured ethanol. And then the total renewable between 15 and 15.5 billion gallons. So if the EPA used this proposal methodology in 2015, I think what you could expect is that the renewable fuel sans the advanced would be somewhere between 13.2 and 13.5 billion gallons. So this is not going to come against the production limitations in no way is production limitation of ethanol going to be a factor there. Total renewable could be somewhere between 15.7 and 16.4 if you use based on the advanced renewable fuel production last year, which included a non-forward-looking tax credit year for biodiesel. And just to point out that the original RFS2 volumes, the industry far outproduced the expectations that were presented in that proposal. So there was a minimum, and I'm focusing here my attention to the right of the dashed line. So there was a minimum of 1.6 billion gallons produced in excess of the 2014 original proposal. And that would be if all the denatured ethanol RINs were retired for for the exports. In other words, we don't know how many RINs were actually generated for gallons that were exported, but assuming that they were all generated and all retired, that's the minimum of what you would expect in excess of the original 2014 proposal. So again, I think that harkens to the fact that the 2014 volumes will be most likely substantially higher than what they were in the original proposal. So we'll be talking a lot more about Argentina, but I did want to generally point out that the EPA has this RFS efficient producer petition process, which enables RIN generation over and above corn and sorghum ethanol plants, their grandfather capacity. And so 24 of those petitions have been granted so far. And so the real point of this slide here is that there's additional domestic and international capacity being added for RFS. So we're seeing growth in the supply side of the industry. Okay, so getting back to the global picture, I wanted to just give you an example of something that we've been working on. We've actually been doing intelligent ship tracking, and I wanted to show you an example of how this works and how we can provide more real-time information about the global picture. Again, this is a work in progress, but I wanted to kind of give some insight and actually show one of the shipments that we've observed. So we actually monitor ethanol storage in the Gulf and in other places, but this particular example showed a big drop, about 100,000 barrels in the, actually bigger than that, I'm sorry, 230,000 barrels from Gulf storage from the week of 220 to the week of 227. And so what we've seen is that these signals can be a precursor to export events, and this is kind of what makes this methodology unique. So basically, based on that, we actually have insight into tank level changes. So this is showing the Vopak Deer Park ethanol storage change by a series of tanks that we monitor there. The green bars show the storage change in those tanks between the week ending February 13th and the week ending February 20th. And then the week ending 20th to 27th, that change is shown in the blue bar. So when you see a big increase followed by a big decrease, then this could be a signal of speculative storage use versus operational storage use. So each of these are candidates we considered for ethanol export events. And you'll see as I progress through these slides, we're narrowing down, right? So we were looking at the fields, then we're looking at the tanks, and then now we're actually looking at, in this slide, okay, so what vessels actually visited Vopak during that period of time? And we saw two vessels. We actually see down to the berth level with our proprietary vessel tracking technology. We saw two vessels that arrived in port. Now, Vopak has a lot of different chemicals and other materials in storage, so just because one of those vessels arrived doesn't necessarily mean that it was actually carrying ethanol. So this is where we layer on intelligence to use which vessel is a candidate for export. And what we actually found was that the Dragon ship was carrying ethanol to Houston, and we corroborated that with actually seeing the 30,000 barrels of undenatured fuel was shipped via the census data. So this is showing a picture of the vessel and then how we track the vessel from Houston down to Mexico. So this was actually an export, again, of one of our smaller trades, but an important one to Mexico. Ethanol was shipped out of Houston. Okay, so this is where we switch directions. So we talked about ethanol. We tried to give a global picture there, and now we want to talk about one of the hot topics that has in the renewable fuel space that everybody's been talking about, and this is Argentinian biodiesel. So first of all, I'd like to talk about this CARBIO alternative biomass tracking program. What is it? So basically what this is, the EPA approved this. It's a compliance survey to qualify feedstock and traceability, and it reduces the biodiesel export record-keeping requirements and replaces it with a survey. In the United States and Canada, we have what's called aggregate compliance under the Renewable Fuel Standard. So producers don't have, and RIN generators don't have to trace the feedstock all the way back to the field. But if you're outside of the United States and Canada, you have to do this. So all that laundry list of things in ECFR 1454, you know, there's documents that have to trace the feedstock back to the biomass. Maps and electronic data with land boundaries have to be produced. The feedstock provider itself has to perform certifications, and so there's heavy-duty record-keeping that's required for importers and producers outside of the United States that are participating in RFS. It's not required of domestic producers. And this is basically tied back to traceability and land use. So what this survey did is it really streamlined those requirements into a survey process for Argentinian biodiesel producers that are a part of CARBIO and their survey plan. So there are 4 elements to this survey: annual compliance surveys, land use compliance, they have to prove chain of custody, and then also perform overall general data management. So a few details that I think are important about this. All biodiesel and producers that are registered with CARBIO have to be surveyed at least once a year as part of this program. A minimum of 5% of grain elevators and farms are surveyed annually. Any other feedstock suppliers that aren't subject to that site visit will be subject to an annual desk audit. And the land use and traceability, the surveyor uses a combination of satellite imagery and also a waybill tracking system that has been in place in Argentina. So basically what happens is this survey methodology in terms of land use defines go areas and no-go areas. And the CARBIO website is actually starting to indicate these go areas, so you can see this survey process starting to be worked, and they're actually listing these things, or at least they were several days ago on the website. So the feedstock suppliers, by the way, must segregate beans from the go and no-go areas, and then soybean oil must also be segregated according to being sourced from go and no-go areas at the crushers. So, so those are, basically some of the details of how this works and how that changes from the regulations of 1454. So who are the CARBIO members and what kind of impact could they potentially have? So this is a list of the CARBIO members. The ones in blue are actually registered with RFS2. So there's about 750,000 gallons by our calculations of total capacity, most of which is registered with the RFS2. You'll see that there aren't individual capacities listed for AGD and Bunge at the top of the chart here, but they have a joint venture in this T6 Industrial, which is a massive refinery and also industrial complex for soybeans in the Rosario City area in Santa Fe. So just some words about Argentinian producers and registration. So I don't think there were any Argentinian producers registered in 2013, but most, if not all, were actually registered by the end of 2013. So not a lot has changed in the RFS registration picture since even the beginning of last year, but certainly what has changed is the survey methodology. So it's going to take time for the facilities to figure out how to demonstrate compliance. The segregation is still a hassle, and we talked to one local source in Argentina that kind of elaborated on that. So, we still think that economics are going to be the driver, but certainly this RFS2 compliance helps open the door. And it seems like, based on talking with some sources in Argentina, that the current prices of RINs could be expected to make the effort to go through the segregation profitable. But there are other factors too, and so we're going to get into what the Argentina biodiesel picture looks like, and then talk a little bit about projected exports and the things and pricing that affect those export activities. So Argentina has a federal mandate for biodiesel blend, 10%. Now, the plants that are a member of CARBIO are close to Rosario City. They were basically built for export. There are smaller interior plants that really support the majority of the biodiesel mandate in Argentina. We were talking again with Argentina, and the CARBIO biodiesel refineries really haven't been running a lot since late 2014. The core business of these plants is really soybean meal. That's where the most profitability is. But they also export soybean oil and biodiesel. They produced 7 million tons of soybean oil on average over the last 5 years and exported the majority of that. Domestically, the oil is really used in the most part for biodiesel. So biodiesel is a margin booster when it works. So if you look at what the FAS is forecasting, the bubbles there on the right, so about 820 million gallons is the expected production in 2015. It's almost a 50-50 split between domestic consumption and export. So, you can see again that it's a market that's built for export. So there were setbacks to the the biodiesel industry in Argentina in 2012 and 2013, and the government has actually taken measures to improve the industry health. First of all, they've reduced the biodiesel export tax from 22% to 10% nominal, and that happened in June of last year. They've also improved the national pricing scheme, how they price biodiesel, and part of that was timing. There were some producer struggles with the timing of the pricing issuance, and these seem to have been resolved. So those two things are net favorable for exports from Argentina overall. So some things have changed, though, in Argentina's export picture. There was also an EU anti-dumping tariff that was imposed on Argentina in 2013, and there's no real sign of that changing. So Argentina went from a biodiesel exporter that was largely driven by mandates to one that was driven by economics. So actually in 2014, competitiveness with diesel prices drove a lot of the trade and exports from Argentina. The top export destinations are Africa, United States, Peru, and Australia. And when you see a shipment of biodiesel leaving from Argentina and going to Spain, and I'll show you one of those here in a minute, it's typically being blended and re-exported, typically I think in the free trade zones there where they're not subject to the tariff. And so you can see that the FAS is basically forecasting heavy trade to Africa, the United States, with the CARBIO survey actually having a substantial increase on the potential exports to the United States based on surveys of traders that they did. And then Peru and Australia also having some, being a destination for Argentinian exports. So we took a look at pricing influences, and one of the things that, in terms of economic motivation, is that the spread between diesel and soybean oil has been a big recent factor in the overall Argentinian exports, especially to North Africa. Now, the RIN price alters that, though, for the United States as a destination. So what you can see in the charts below, the one on the left, so this only shows between 2013 and 2015. And the reason is because, like we said before, the landscape in terms of exports from Argentina really changed after the EU anti-dumping tariff. I also wanted to caution and use caution in using this and calling this a trend. The yellow dots you see in each of these charts is actually extrapolated using year-to-date data for January and February only. So we've got a long way to go in the year. So the U.S. has imported about 28 million gallons so far. It's fair to say that that's nearly half of what we imported from Argentina last year, of all last year. But the imports look to have slowed a little bit in March and April. So I think post-harvest activity will really be the key indicator of what's going to happen for the remainder of the year. But that being said, based on the data that we have right now, so you know, you can look, it seems to be a correlation, and this is not something that's unanticipated, but between the average D4 RIN price and the number of gallons that we imported for Argentina. So as the RIN price goes up, we're more likely to get biodiesel, we're more likely to import biodiesel from Argentina. The other thing that's interesting is as the spread between wholesale diesel and soy oil gets more negative, we're also more likely to see U.S. importing from Argentinian biodiesel. And so you can see again, it looks like a trend is starting to emerge there, but it would make sense in that, you know, if wholesale diesel and world soy oil spread is getting more negative, then exports from Argentina to Africa are less attractive and could be more attractive to bring it to the United States. Another thing I wanted to point out, though, is that soybean oil prices on their own also have a factor on whether Argentina actually processes the soybean oil into biodiesel or not. So there was a drop in the tax rate that we talked about earlier in mid-2014. That actually increased the value of Argentinian soybean oil. Now the basis is negative again, so that could send a signal to that there might be a sustained decrease in biodiesel exports from Argentina, that they're favoring soybean oil exports. So it's a pretty complicated trade relationship, but you have to watch that balance between diesel prices and oil prices. So we've been doing some vessel tracking. Again, this is early activity, but we've seen actual shipments, and this was in early March, or at least it started in early March. It takes about a month usually to get from Argentina to another destination, sometimes longer. But we saw about 15,000 tons of biodiesel headed to Spain. Again, this is most likely for blending and re-export to North Africa. we're also have been looking and tracking. We saw that there was a 20,000 tons that arrived in the United States that departed from Argentina in March. Also, there have been a couple of exports to Peru, and then the one, of course, we showed to Spain. There is some anticipation that we've seen that some scheduling of departures to Peru, and then another one that was scheduled for the U.S. However, for the one that's scheduled for the U.S., we actually haven't seen that vessel arrive in the departure port yet. So really not tracking on an April departure for that. It might be delayed. So what to watch, and this will wrap up our presentation for today, and then we'll start taking some questions. Ultimately, it'll be a strategic decision for the CARBIO producers to run or not run for the biodiesel refineries. And the question would be, you know, once the harvest comes in, how long will they run and when will they run? So the Argentinian soybean harvest actually started in February, and the crop could be a record this year. So wouldn't expect any, you know, crop hindrances to, or production hindrances of soybeans to interfere with soybean oil production. Soybean prices soybean oil prices are fairly low. The diesel to soybean oil spread, I don't think that there's anything in the near future that would make us think that that's going to change dramatically. Continued low diesel prices, I think, are expected over the summer, and again, as Will pointed out, there are some factors that can make that go even lower. So that diesel to soybean oil spread could get more negative potentially as the year goes on. Have to continue to watch U.S. biodiesel production and prices and how that's going to be able to fit and be able to sustain the RFS2 biodiesel mandate and what those mandates will be. The RVOs for 2015, 16, and 17 will certainly have an impact on the RIN value after the RVOs are released. And again, that will have a direct impact on what the potential is for receiving more biodiesel from Argentina. So with that, I'm going to take a look at some of the questions. We've got about 7 minutes here. Don't be shy. Go ahead. If you've got more questions and haven't asked them yet, we would be happy to answer them. So Will, do I still have you with me here?
Yeah, I'm here.
Okay, good. Good to know I didn't put you to sleep completely there. So that's good. So one of the questions that we had here was, and feel free to talk to this, and then I can take a stab at it too. But someone was asking why do we have both imports and exports to Brazil? What are some of the factors in your research that you've seen that have contributed to that?
Right. So there are a lot of different scenarios where that can take place. Some of them can be as simple as different markets within the U.S. Having slightly different prices, but one of the biggest factors with that are the prices of environmental credits in the U.S. And so when I say the environmental credits, I mean both RIN prices and the RFS credits that are possible with Brazilian ethanol being imported into California. So, you know, you could imagine a scenario where there are exports of U.S. ethanol to Brazil because U.S. ethanol is cheaper at the time, but then when an importer has the opportunity to capture those environmental credits, they're still able to make money importing Brazilian ethanol, especially if it's going into California where they can get both the RIN and the LCFS credit.
I think that's very well said. I don't even think I think we'll just leave it at that. That's a great answer. We've had a couple of questions in here in general on the RFS, and I did want to talk about that. One question was about cellulosics. There were questions about, you know, there may be some. The question was about, I see problems with the technology, cost, and ability to produce large volume, say 1 billion gallons per year per plant. And I think that something interesting that happened with RFS2 really last year is that, you know, the cellulosic basically the biogas-related CNG and LNG fuels were qualified as cellulosic fuels, and I think that that's kind of opening up what's qualified as a cellulosic fuel, and I think that there's growth potential there for those cellulosic fuels. Also for cellulosic ethanol, there's growth potential as the technology becomes more mature, and certainly that I think that Quad County Processors produced its 1 millionth gallon and announced that, so they've made some real headway. And then there are others that are developing these technologies commercially that are going to become emergent too. But I think that both of those things are leading to growth in cellulosic fuels. And hearing the EPA speak a couple of weeks ago, the representative said that they are very bullish in the long term in the future of cellulosic and advanced fuels, and are really paying a lot of attention to new pathways and things that are coming across their desk that are related to cellulosic and advanced. The other question I think we had on that front is that, do you see any significant revamps of the U.S. RFS? And I think it's really hard to predict, but I think that, if methods are, I think 2014, there was a message sent, which is that the Clean Air Act volumes aren't going to be followed going forward, that there are other things that the EPA is going to consider. And I think the rate of ethanol blending and consumption is going to be a big factor in how they forecast that going forward. So that's really the biggest change. Let's see. Let's see here. Well, I know that we talked a little bit about Canada and Brazil. Well, I tell you what, I'll take this one since I covered Canada, but is there a reason why Canada doesn't blend up to the 10% ethanol blend? I think it's a good question. I think there's some economic balance that's hit around that 7%, so that really if it could be that if there were more blended, that there may be some transport constraints or something like that that would create an imbalance in that amount. It also may have to do with the ratio of domestic production to imports. That's really the insight that we could give on that one. We maybe look into that more and see what we can dig up for our next follow-up presentation. Well, you talked a little bit about the California market. There may be some expansion, into Oregon and Washington State and British Columbia. That would tend to, also increase the potential for imports into the United States. You talked a little bit about that with Brazil and LCFS. Any further insight or comments on that?
Sure, Susan. So I'm not too familiar actually with the timeline of when those other markets are getting started, but one thing that I didn't mention that's also important with the LCFS credits, and why that's so important for Brazilian imports, is that those credits aren't available to most U.S. ethanol producers. The way they calculate carbon emissions excludes a lot of U.S. producers from the ability to capture those credits. So that's one reason that looks so good to ethanol importers there.
Very good, very good. We have a lot of questions on the docket here, and I think some of them may require some further, a little bit of further research. I will take, there are two more questions here that we'll take, and then what we'll do is we'll actually take each of these questions and produce a questions and answers document. What you'll get as a result of this, you'll get the final slide deck that will come from our wonderful and awesome marketing team here at Genscape, and you'll also get a link to the recording of the webinar. And then it'll take us a couple of days, but we'll put together this Q&A document that will follow up on all these questions, and some of them, like I said, may require a little bit more work, but we're happy to do it, and thanks for keeping us on our toes. I think that one of the questions was, as we're doing the ship tracking, how real-time would we expect this to be? And I think right now, we're still in the development phase on it, but I think there is some potential that we there is some potential that we will be able to. What we're trying to do is trying to forecast when these exports might be happening by actually looking at storage changes. So what we'd love to do is to be able to tell the market, hey, there was a big storage change in a tank that we recognize that has speculative value, and we think this is actually forecasting an export, and then be able to track that actual physical export to its location. One of the most difficult things about tracking ethanol globally is that these oil and chemical tankers have a lot of different compartments and can store different things at the same time. So that's part of what we're doing, is really collecting the intelligence on which of these tankers is actually transporting ethanol, and how to recognize that in a reliable way. So I think that once we have that intelligence, we'd like to be able to forecast it with where we monitor the storage, and then be more actual real-time on the transport out of the Gulf and other areas of the United States where it's profitable to export out of. So Will, I'll put you on the spot here, and I'm actually having to Google it right now, if that tells you. I've been focusing a little bit too much on the webinar and not enough, I guess, on the Derby. But we actually have a question here. Who should I pick to win the Kentucky Derby on Saturday?
Oh my gosh!
Final question.
You are putting me on the spot. I'm a bad Louisvillian in this instance, because I don't even know who's winning the Derby.
Will and I have been all work in no play here. I tell you, I haven't looked. I'm not a handicapper, but I have to love Carpe Diem. It's a great name. So I also have Jim Venhoff, who is on the webinar. He's actually come by, but he likes Pharaoh, American Pharaoh. So that's probably the least of our ability of forecasting abilities. I think we do better at global ethanol and Argentinian biodiesel than we do picking the Kentucky Derby. But humoring the request, there's our off-the-cuff picks for the Kentucky Derby. So, Will, anything to add for today's presentation?
No, Susan, I think you covered it. I mean, there's still questions that we weren't able to get to, but as you said, we'll follow up with all of those after this presentation is over.
Very good. I want to thank everybody for joining us today. Thanks for the wonderful questions, and Will and I look forward to answering those and getting those back to you. And certainly don't hesitate to reach out to us if you have any further questions. Our contact information is here. So thanks again. Have a wonderful week, and we look